Joining me now at the Grand Cayman Liberty Forum is Charles Tiano of Royal Energy, and we're going to be talking nat gas, oil, and how this all ties into gold. So, Charles, thanks so much for joining us on Kitco News.
My pleasure, Daniela.
So let's start by looking at oil prices, which are trading approximately now at $75 a barrel. And, crude oil prices have dramatically fallen since June, when prices reached this year's high of $107. So let's look at what's happening to oil right now. Do you think we could see a turnaround?
Well, in the near future, I really think that oil prices are going to stay at this stagnant level, but at the same time, natural gas prices are going to continue to increase. With the cold weather coming, and then with the war on coal that's going to start in April of 2015, as far as the mercury air toxic standards, we're going to see oil prices stay in that range and natural gas prices move up a little bit. As far as the oil prices for the long term, we're still bullish on oil prices in the long term.
Long term. So long term, you're looking at 5-10 years, or
1 to 5 years.
1 to 5 years. So looking at nat gas, your company obviously specializes in nat gas. What's the supply and demand scenario like right now?
Well, over the past year, we've seen demand catch up to supply with the storage withdrawals from last year. Now what we're finding is that natural gas prices are staying steady over that $4 mark, and we firmly believe that they're going to go higher. Only with the energy equivalent basis from oil to natural gas, with the mercury air toxic standards, with the ramp up in exportation of dry natural gas to Mexico, and with these LNG terminals coming on board here in the near future, we see natural gas prices move in the $5 and $6 range, if not higher.
Okay, so what has weighed on oil these months has obviously been the large supply, low demand, and the strong U.S. dollar. It's really a dollar story, just as it is for gold. What are some of the fundamentals when we talk nat gas?
Well, what we see with natural gas, it's all about demand and then how much it costs to pull it out of the ground. Where Royal Energy drills in California, we don't have to hydraulically fracture those wells, and so therefore our costs are down. So that gives us the ability to pull out gas out of the ground for below $2. Our lifting costs are sub $2 per 1,000 cubic foot. And we feel confident that prices are going to move up in the future. Now with oil and gold, you see that those lifting costs have come down, and the demand is not as high as it used to be. So we're constantly finding ways to pull out natural gas at a cheaper way, just like the oil and gold producers are. The funny thing is that oil and gold are very much connected because of the fact that A, they're tied to the US dollar, and then B, it's all about lifting costs, how much it costs to pull that oil or gold out of the ground.
So obviously you track gold.
Absolutely.
So let's talk a little bit about your forecast for gold and how you see the metal.
Well, it all depends on interest rates and risk tolerance. So what we're finding is that when investors are less risk adverse and they're ready to take on risk with stocks and bonds, well, gold prices are going to come down. When the stock market starts to move in a different direction, well, we're going to see gold prices move up. We firmly believe that interest rates are going to be increased and gold prices are going to move right along with that.
Are there any good takeaways you've learned from this conference? We've had some great keynote speakers, Robert Ringer, Adrian Day. Any takeaways?
Absolutely. What we're finding is that investors here at this conference are looking to move away from the stock market, and they want to own a physical asset that's stored in the ground, like gold or natural gas, that produces them out monthly income. And that's what Royal Energy has been doing for the past 28 years, is where we bring on industry partners and other accredited investors to drill natural gas and oil wells with us, just the same as other gold companies would do this, do that as well. But what we like is that cash flows are there, prices are moving in the right direction, and then Royal Energy is able to take advantage of this and drill twice as many wells.
All right. Well, Charles, it was nice meeting you, and thanks so much for joining us.
Thank you so much for your time. We'll talk to you soon.
Yes, absolutely. And thanks for watching our coverage here from the Grand Cayman Liberty Forum. We'll have more for you this Tuesday, so be sure to stay tuned to Kitco.com. Thanks for watching.